value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Here we are in 2021, and just as crazy as last year.
Well, if you know what you're doing, there's money to be made, hopefully. What's the story behind gold and Bitcoin?
Well, we've seen giant moves in both that have gotten a lot of attention. Bitcoin has been going straight up lately, and I've seen lots of people that don't on social media, my Facebook, that aren't normally talking about the stock market, all of a sudden, talking about Bitcoin. So I think, it's getting a lot of interest, much like it did in 2017. And people who promote Bitcoin, they'll make claims like it's going to be a safe haven, it's going to replace gold and so forth. And at the same time, when the year started, we saw gold go up on the first day of the year and then give up those gains basically, and it's been a little volatile day by day. So I've gotten a lot of emails from people asking why is that happening, and some people are thinking that the rise in Bitcoin is causing the decline in gold, but I did an article on my website that demonstrates that's really not the case at all. What I did is take a look at the correlation between gold and Bitcoin and several other things. And what a correlation is, it's how closely something moves with another asset in the market. And you can mathematically compute this. I used a correlation over a 200-day moving average. And when that indicator is at 1, it means something is moving perfectly in sync with what it is you're comparing it with, the closer to 1 being the case. So, for example, if you were to look at Newmont and compare that to the GDX gold stock ETF, the correlation is going to be over 90 because one is a mining stock, the other is a mining stock ETF. If a correlation is close to -1, it means it trades completely opposite to one another. For instance, if you looked at the S&P 500 versus short ETF, it's going to be -1. Well, I compared gold to the U.S. dollar index, the TLT bond ETF, which has also gotten a lot of attention because treasury bonds have been fading a little bit in the past couple weeks with the 10-year yield going above 1 in the U.S. dollar. So with Bitcoin, the correlation is 0.36, which actually means the correlation has been positive, not negative. So gold hasn't been dropping, when Bitcoin has been going up. So that thesis is actually not valid. It's just people are seeing these things happen and kind of jumping to a conclusion based on what's been going on in the past week. And 0.36 isn't really a strong correlation. You're getting close to 0, which would be completely random, which is actually where we are with TLT, interestingly enough. The correlation between gold and TLT with using the 200-day moving average on both is actually negative 0.05, very close to 0, which is interesting because it's easy to assume that it's the movements in the bond market that are moving gold. when the correlation that is the most consistent with what's happening with gold influencing the gold price in the short term is the U.S. dollar index, the negative correlation of 0.78, very close to -1. And historically, gold has a negative correlation to the U.S. dollar. So what's been happening with the price of gold, where it gapped up and then didn't really do much afterwards, isn't actually that abnormal, because we came into this year with the U.S. dollar index extremely oversold, and it has since, put on a very weak bounce over the past 10 days or so. I don't really think there's that much upside, but when you get the U.S. dollar index extremely oversold as it was, and then put on a bounce, typically you'll see gold pause if it's in a strong uptrend, or have a small pullback. And that's really what I think is going on. Gold is trading around 1850. Really, that's where it was a couple weeks ago. If you look at what's been going on, since August, it's kind of settled into a range, with 1950 being the top of it, and somewhere above 1800 support. And to me, that still makes it a good time to accumulate mining stocks that you really like, you're really interested in, and small cap stocks in particular, because there's also a trend with them where you can see a lot of small cap stocks, if they have been going up strongly into December, they often have a pullback of tax loss selling into New Year's, and then start to go up. So I think being January is actually one of the best times of the year to buy small cap mining stocks. I'd rather buy them then than any other month, and be more cautious when you get to October and November, particularly if you're in ones that aren't going straight up, or are below their 200-day moving averages and so forth, because they tend to see some selling going into the year. So to me, we're in the best time to be involved in them, really from now to, let's say, the fall or so.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, so many people are telling us the stock market is near its top, and when it corrects, it won't be a correction this time. It'll be a crash. Any concerns there?
Yes, I'm on guard for that scenario. I'm not predicting it. I'm not sure of it, but I'm extremely alert to it. I don't think we're on the verge of a crash anytime soon. But it is possible we could see a decline of 30% or so in the S&P 500, similar to what happened last March. But we would need a trigger for it to happen. And last year, the trigger was obviously the pandemic and the impact that would have on the U.S. economy. Stock traders, hedge funds, everyone in the markets was on guard, what was going to, be consequences of that, and how bad could it be when the market turned down in March. And one of the things that happened was there was such intense selling when that occurred that it locked up the bond market. It caused distortions, or a lack of liquidity in the market caused distortions in some exchange-traded funds. For example, the GDX ETF, was liquidated so much that it traded at almost a 10% discount. It might have been a little higher than that to its net asset value, which was a pretty amazing thing to happen. So I think it would take a similar panic of people needing to sell immediately or feel like they must to cause a decline of 30% or over 20% at the minimum. And people, once it would happen, they would think it was a crash instead of a mere correction. Because every single year, you're going to get, you should expect a pullback at least of 10%. Typically they happen more than once. We had one actually after Labor Day in the S&P 500 and the NASDAQ both pulled back over around 10%. Typically happens every year. A 20% pullback is more alarming. We had one 2018, 2016. And anything bigger than that, I think, in my mind, feels like a crash, which is what we had last March. So what would make me worry that that's going to play out? Well, the main thing that would worry me is if we continue to see interest rates in the United States slowly go up. They don't have to go up that much, but if the 10-year bond yield gets over 1.5% towards 2%, and the corporate bond market also has an uptick in yields, for example, that would cause the LQD and the J&K ETFs, which are corporate bond ETFs, to fade. If this was to happen while the stock market is continuing to go higher or not declining, that I think would create a high risk of a sizable panic in the markets, especially if we see increasing margin debt going into it. But that's not something that is going to happen next week. It would take months of the market trading in such a way where these risks kind of grow to make me really worry that sort of event is upon us. It would be at least in the spring, probably in the second half of the year, but it's definitely a scenario I'm on guard for. I'm not saying 100% that's going to happen, but let's say the odds are over 50%. What would actually let's say the odds are 70%. What would lower the odds to below 50%, ironically, would be if the stock market were to pull back now or before the spring 10%, because smaller corrections in the market tend to be healthy and help you maintain an overall bullish market structure. It's when the market does not correct for a significant amount of time or goes higher and higher and higher. That's also when the risks of a sharp pullback turning into a scary meltdown increase. It's essentially what happened in the spring of 2000, and when we had the flash crash in the U.S. stock market in, I think it was 2018 in March, February. The market had went straight up for almost 2 months. So straight up moves are ones to be on guard for, where things get so overbought that, in terms of price, not simply valuation, that you got to expect a sharp, at least bout of profit taking. We're not quite at that moment in the markets, but I would be concerned if the RSI indicator on the S&P 500 got above 80, and we're not at that. It would take a month or so of the market going straight up from here for that to happen. And, it's not doing that now, but, it could. So basically, to sum it up, I could say, for what I'm saying, it's all a situation where there are risks out there, and we got to be on top of watching the market week by week in case things develop on various indicators that would suggest that a meltdown is happening, but I'd be very cautious in simply predicting that, in the second half of the year it's going to crash, or on a certain date it's going to crash. I don't think anyone can make such predictions like that.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, any particular areas that have really caught your attention lately?
Yeah, right now, we're seeing a lot of buying across the board in various commodities. Agriculture commodities have really taken off since the start of the year, but I think they made a secular bottom in April, so that's not too shocking. While gold and silver are kind of trending sideways, all these other commodities are really taking off. And these are ones I mentioned agriculture commodities with you in the past months, but right now, if there's one sector that's the most interesting to me, it's the energy stock sector, because it's lagged the other commodities and now appears to be breaking out itself. So we've seen, for instance, Exxon, which is a stock that I have a position in. It had resistance at 45 going back to July, and it cleared that last week, and so have many other energy stocks have done the same thing. So that suggests to me that we've seen a nice breakout, and we're likely to see these stocks trend higher, and these are stocks throughout the energy complex that pay very sizable dividends. And besides that, in the U.S. stock market, I also see interesting buys in REITs, which also pay big dividends, and it was a sector that had been lagging the U.S. stock market, but managed to firm up after the November election and the vaccine announcement, and is still trending sideways overall. You can look at the RWR ETF, which I also have a position in. It's trading below 87.5, which has been the high since November. If it can clear that, that would suggest that we're also seeing a key breakout in that sector that would likely at least last for several months, and there's lots of stocks inside that sector. So, a lot of people I know are out there chasing the Teslas and the technology stocks. Bitcoin people, people chasing Bitcoin, whatever goes up, people tend to try to chase it. I don't like to trade like that. I like to look for overall sectors that, are in a position to break out, and then as they do it or before they do it, get in. So you're in earlier on a trend instead of potentially at the very end where you can get caught holding the bag very easily.
You're saying so many people are chatting about Bitcoin, and I always heard when people are chatting about something, that's probably the last time you should think about getting into it.
Yeah, I hold the same view. I mean, that said, you can be, if someone were to ask me, should I buy Bitcoin, I'd say no. But, it doesn't mean it can't go up higher. The problem is you gotta have a strategy of when you would get out, and it's very difficult, to trade, on something that's just going straight up. It's easier to wait for a pullback or a period of consolidation. It just gets more and more risky. And then when you hear everyone around you talking about it, to me, that makes me real uncomfortable to try to jump in.
What's going on with platinum and palladium?
Well, the prices for both, actually, let me pull it up so I can tell you for sure, because I haven't looked at both since New Year's. But I'm assuming, they both made a new high right after New Year's, actually, and are doing pretty well. And that's the funny thing about what's happening with gold and silver. They've been going sideways, but other metals have recently made new highs almost across the entire metals complex, and so have metal stocks. Copper is also something that's been doing really well, and copper miners, have recently been outperforming gold stocks, with many of the major copper miners making new highs. So when I look at palladium, platinum, and all the other metals, to me, it's telling me a story that, the global economy is set to grow from where it was last year. Doesn't necessarily mean it's got a boom, but, it's bottomed out. And these metals are, the action these metals are telling me that. They're going to also be seen as indication that we could be seeing a future of higher inflation to come also. But I think they're great places to invest in, because in either scenario, you're going to benefit. Whereas if you simply buy economically sensitive cyclical stocks, they may not go up that as much. They wouldn't go up as much as these commodity-related stocks if we're seeing more inflation and less economic growth, like a stagflationary scenario, which is very possible too.
Mike, I know you keep an eye on the Robinhooders. What are they doing, and what kind of an influence are they having on the markets?
Well, I think they're having a greater influence. There's a story in the Wall Street Journal today talking about these SPAC plays. It's sort of a shell company thing, a way for companies to go public, and how a lot of these are being bought by Robinhood people, and they're the ones really moving the day-to-day prices, because these are basically blank check companies. So they're having a lot of influence in that sector. We've seen in the past years they've had an influence in the marijuana sector, and there's only been more and more Robinhood accounts opened, so there's no reason to think their influence has diminished. But the stocks that they most own, I'll give you a list of some of them. Number 1 is Apple, number 2 is Tesla, NIO is number 3, GE's next, Ford, Microsoft, Amazon, Disney, American Airlines. These stocks I've just named have consistently been, let's say, in the top 50, Tesla being, one of the things that's remained in the top 5, consistently, when you look at this list. So, and if you look at what Tesla has done, it's gone, completely parabolic. It's one of the top gaining stocks of the entire, past 12 months. So that, I think, is a symbol of the influence of Robinhood traders, people who invest more in fundamentals and look at valuations and earnings metrics are less likely to be buying Tesla, meaning professional money managers and hedge funds, than someone with a Robinhood account. So I think Tesla is a sign of their influence.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.